Oh, absolutely. I know you and I are definitely in agreement, but the charts support that the bottom in gold on the spot market. And I think a big problem, frankly, David, is that we have been taught that if Wall Street tells us this is the value of something, well, then it must be the value of something, when that is really inaccurate. So when you ask me where gold is going, in terms of dollars or euros or yen or any of that fiat money, a lot higher. But the reason is because its most important function is to hold its value. So if you look at what the global central bankers are doing for themselves, they are accumulating gold at the highest levels that they've ever recorded, even as the price has been consolidating 1460 whatever. Yes, we technically we concluded a cup, but it's still dirt cheap. At 1900 it's dirt cheap. At 8,000 it's dirt cheap, because the way that the government and central banks use gold is to reset, revalue the fiat money. Dollars, euros, yen, and fiat, for those listeners that aren't aware, the translation is by decree. So it's government legalized money. And what do we know about governments? If they have the right to legalize it, they can also say, we saw this in India just a couple years ago, oops, no longer legal to use. And they demonetized something like 95% of all the currency that was out there in order to push their population into going cashless, because frankly, that gives them a lot more control. So you don't own physical gold outside of the system because it's going to go up in nominal terms. And anytime you hear me say nominal or notional, that means you don't really, there's not a clear value. That's just a number representation. You own physical gold in your possession because it is outside of their system, and because it performs the same most important function that it always has. It holds value. Now, why does it hold value? Regardless of what happens with the spot market, it holds value because it actually has the broadest base of buyer of any asset out there. In other words, it's used in manufacturing, it's used in the financial system, it's used in medicine, it's used in food, it's used in art, it's used in jewelry. Globally, it has demand across every single sector and segment of the global economy. So maybe the price goes up, maybe it goes down. I mean, historically, before we went on the fiat system, it would go inside of a range, but there is always demand, because what gold does for governments and central bankers, which is why they don't like it, is it forces them to have fiscal responsibility, and it puts limitations on the debt that they can grow. And as we've seen, particularly since the financial crisis hit in 2008, what we've like tripled or quadrupled our debt levels.
Yeah.
So they wouldn't have been able to do that if we were on the gold standard, but that is exactly why it would be a very good idea. Having said that, when there is a reset of the financial system that has already begun, and we know this also because if you look at all of the traditional bank layoffs that have been going on and the rise of financial technology, well, there is that shift that's happening right there. I'm actually going to be doing a piece on this probably next week specifically. Well, those that hold it, which is why the central bankers are buying it, are going to have massive opportunities. And while, what you're talking about is fiat money versus fiat money, so what, we're the healthiest or the least sick horse in the glue factory?
Yeah.
Everybody's still in the glue factory.
Yeah.
The real test of the value of a currency is in how much you can buy with it, your purchasing power. That's the inflation that the central bankers keep talking about, and they say that they can't reach that 2% inflation target, and they're shifting some things in there as well, getting us to run a lot hotter with inflation. But if you could take a minute and look at your personal experience, that's really how you value a currency for the individual, is how much can I buy with this? And I think a year ago, wasn't it that most Americans couldn't come up with $500 in an emergency?
Yeah.
And the more current numbers that I saw just recently, where they couldn't come up with $400 in an emergency. So I don't think it's getting better out there for the normal population. And I think that their cost of living has definitely gone up way more than that inflation level. Having said all of that, I also want you to take a look at the derivative contracts on gold. The Office of the Comptroller of the Currency publishes a quarterly report on derivatives held in FDIC insured banks. And when you look at the trajectory of those gold contracts, and then you put that with data that I saw before they changed the accounting rules, because that's what they do. They don't change the behavior, they change the accounting rules.
Right.
But the data that I saw were from the Bank for International Settlements, stating that for every 1 ounce of physical gold, there were 62,000 ounces of digital gold. They can do anything, really, they can do anything they want with the visible price.
Right.
Because none of that really makes sense for the level of buying that the central banks have been doing since 2008. Before that, they were net sellers. They were selling gold to suppress the price. But, now you just sell a simple contract. It costs you $150 to control 500 ounces of physical gold or 5,000 ounces of physical silver. You do the math. That's a lot of leverage, and it's pretty darn cheap when all you have to do is push a button. You have to go out and mine it or process it. And I think a lot of people just put too much confidence in these intangible instruments that are really designed by Wall Street, and a lot of their function is in perception management. In other words, getting you to believe what you see so that you move forward in a way that supports their goals.